Hello guys, welcome to today's market analysis. So here's what happened on Friday. On Friday, I would say I wouldn't say the bullish hammer, but I would say it's a bullish price action because if you see the wick on the downward side is quite huge, right? Like someone tried pushing it down and then someone bought it up till the high. I would have really loved it if there were a green candle closing, but it was a red candle closing. Okay, never mind. Okay, but here's the main thing, right? The uptrend is still intact. As in, there's one thing in the stock market where there's a concept where gaps are always filled. So if you see from this candle to the next candle, there was a gap up, right? Now somehow the gap up has to get filled, and that kind of acted like a retracement in this bull run. So this particular 4 days of action, I would treat that as a retracement and expect the bull run to continue. Okay, so I feel this support is surely going to be held, right? If you see, support line is not exactly one particular price line, right? It's on zone, right? So it's mostly like this particular line where there have been resistances before, like this was resistance before, right? Now we are taking support there, right? You see this particular 4 or 5 candles have taken support there. This is what even happened previously in any bull trend or any upside rally, right? Like you went up here. For some time, you'll spend time here. You'll take support and then you'll resume your bull run, and that's what usually happens, right? And if you look at the weekly candle, see, last time we had a bullish engulfing, and what I told in the last video's analysis is that I will be taking bullish positions as long as this week's candle doesn't eat into the gains of last week's candle, right? And that did not happen. As in, it did not eat into the gains of the last week's candle. So this actually confirms the bullish engulfing. It's like the bullish pattern is set to continue, right? So chart wise is looking absolutely bullish. Now, if you see, look at the open interest, there is heavy put addition at 18,500, and 18,500, 18,600 seems to be like this make or break zone, right? So immediate support at 18,500, immediate resistance at 18,600. But however, see, this is just around 1 day action. This is Friday's action. So I would not rely on this much. And even the PCR is 0.74. In fact, tells us there is more bearishness in the market. However, I would like to go against this data, given the fact that there is beautiful chart formation, which is forming. And guys, a small error that I made in the last video, I clicked on this next expiry while calculating the monthly interest and all of that. We're looking at the future OI versus this thing. I should look at the current, so I'm sorry for that. So if you see from last Friday, when was Friday? Last Friday was 26, right? So from 26 to today, 26, Nifty has gone up a bit. Compared to 26, you have gone up a bit. If you look at the volumes, it was 95L. Today it's 90L. So the volumes have decreased, but the price has risen up in a week's time frame. This indicates short covering. It's not like new longs have been added, but existing shorts have been taken off, right? So this also signals bullishness. If you look at what the big guys have done, they were mega bearish, right? Mega bearish compared to the last time. But however, the last analysis I told that the ratio is just 2:3, right? Generally, only the ratio is like 2:4. 1:2. Like there are 2 times the number of puts as much as the calls. That's what actually signals bearishness. Until then, it just means bullishness. Okay, this is the reason, right? Now you may ask me why is it that the puts are always huge, even though we are now some mega bull run and all of that? That's because foreign portfolio managers usually buy puts to prevent their stock portfolio from falling down. Like you'll just keep buying puts to make sure the stock portfolio doesn't go down. That's the usual practice that all fund managers do, right? That's why you'll always see the red ones to be a lot, right? But that doesn't actually, unless the ratio is too huge, like it told 1:2, it doesn't actually signify bearishness. And if you see the gap between the green and the red bar compared to 1st June to 8th June, that has decreased. That indicates bullishness. So 1L buy and then 37K put buy. So net 70K bullish. Nifty index future 240 crores. Nothing much. Okay, I'm just happy it's positive. This figure is kind of worrisome. For the past 2 trading sessions, FIAs have been booking profits. And so here's the thing, okay? That's kind of worrisome. Okay, but not much of a worry is what I will feel. So these are my positions. As I told you, I'm a very conservative trader. All I want is my 1% for the week. And this week, I think I'll make it. My break even is 2% away. And that will not happen. I'll tell you why. I'll be in profit this week. I'll tell you why. Because you look at XGS Nifty, that's showing a gap up of some 100 points, okay? And if you look at what happened in the global markets, because the debt ceiling issue has been solved and all of that, everyone is like 1% up, right? So Monday will be opening a 1% gap up. But here is a prediction that I would like to do. If there is a gap up and if FIIs are still in the booking profits mode, the gap up may not sustain. Okay. So I would say actually wait and buy on dips, right? And if you are not able to buy on dips, I mean, you'll always get another trade, right? So don't rush into the trade. That's it, guys. I'm not a SEBI registered analyst. So all these are only for educational purposes. So keep your capital safe. Thank you and have a nice night.